Hello and welcome to this weekend update. Today is 18th of March 2023. So we'll start off with the bond market. The bond market seems to be in a lot of uncertainty. There's quite a bit of volatility in the bond market. You're looking at the daily chart of two-year bond yield. On Friday, the two-year fell 31 basis points. And on Thursday, the day before, it was up 27 basis points. On Wednesday, it was down 36 basis points. So you see a lot of volatility and uncertainty in the bond market. And this has been caused by what's happening in the banking sector. You know, last week, Silicon Valley went under. And then First Republic is now in financial difficulty. Even in Europe, Credit Suisse is having problem. So there's a lot of uncertainty in the banking sector, and the bond market is wondering whether we're going to have Lehman Brothers 2.0. And that's why you see bond yields gyrating. And on top of that, we have a Fed meeting next week, and on Wednesday, we'll find out what the Fed wants to do. Now, if we look at the probabilities, you'll see that at the moment, there is a 62% probability that the Federal Reserve will increase interest rate by 25 basis points. 38% probability that interest rates will remain unchanged. In fact, a week ago, the probability of an unchanged interest rate environment was 0%. It has now gone up to 38%. In fact, a week ago, there was a 40% probability that the Federal Reserve will increase interest rate by 50 basis points. Right now, it's 0. So these probabilities, so the probability now says that Federal Reserve will increase interest rate by 25 basis points. But if we look at the bond market says something different. So this is the Fed funds futures for April expiry, and it closed at 4.73, exactly where the Fed funds rate is right now. So this suggests that the bond market is not expecting Federal Reserve to increase interest rate next week. It expects Federal Reserve to leave interest rate unchanged. If you look at the June expiry, it's at 4.66, below the current Fed funds rate. If you look at September expiry, September expiry is at 4.18. So effectively, the bond market is saying that by September, the Federal Reserve would have to cut interest rate by 50 basis points. That's the current expectation. If you look at the December expiry, this is at 3.87%. It's basically saying that the Federal Reserve would have to cut interest rate by between 75 basis point to 1 full percentage by December. So the bond market has a completely different expectation than what the probabilities are showing. And what's dramatic is how the expectation has changed. You know, just a week ago, the market was expecting Federal Reserve to increase interest rate to somewhere between 5.75 to 6%. Now, within 2 weeks' time, we're talking about cuts. And judging by what's happening in the bond market is anticipating something negative to happen in the economy, to the point where Federal Reserve would actually have to pivot. When I say pivot, I don't mean pause. I actually mean cutting interest rate. So this is a dramatic shift in the bond market. And the bond market is definitely concerned about what's happening to the banking sector, the regional bank in specific, and whether or not there will be a contagion, whether or not this will spread to other banks. You know, so far we're aware of a handful of banks. And that's why you see the bond yields are gyrating, moving up and down, big swings every day. And definitely bond market is thinking that the Federal Reserve is not going to be able to raise interest rate. So it will be interesting to see whether or not Federal Reserve actually does so. And if the Federal Reserve does increase interest rate by 25 basis points, how would the bond market and the stock market react? because at the moment the bond market is saying that the Federal Reserve will leave interest rate unchanged. So we'll learn. We'll find out on Wednesday what the Federal Reserve ends up doing. Now, one of the beneficiary is obviously the bond prices. So if you look at this is TLT. You can see that TLT is moving. Since forming a low right here, it's been moving higher, and it rose as high as 110 right here. And then now it's consolidating between 103 and 104 and 110. So this is the area of consolidation. If you look at the momentum indicators, they're starting to move from negative to positive. You can see MACD is about to cross above the zero line. So that is positive. RSI has gone above the 50 level right here. This is positive. This shows that the momentum has shifted from negative to positive for bond prices, which means that buying bond is actually the right trade is the correct trade at the moment. If we look at the weekly chart of the bond, just to see what the weekly patterns are showing right here, you can see that 110 has been an important level. Rejection here, and 104 has been a good support area. So if it's able to close above 110, then we could potentially see a move up to this level, because on a weekly basis, it has traded in this range. So if you double this, that projects a target to around this level, which is around 120. So this could be a potentially good trade in bonds coming up. Also notice that momentum is improving. You see MACD is moving higher. It hasn't closed above the zero line yet, but look at RSI. RSI has closed above the 50 level. Since falling below the 50 level right here in December, and it's staying underneath the 50 all this time, it has managed to close above the 50 level for the first time. So this is definitely a positive sign for bonds. So something to keep an eye on. So what does all of this mean for the stock market? So let's have a look at the S&P 500 and see what S&P 500 is doing. So this is the daily chart of S&P 500. So let's first look at the structure. You'll see that the structure is since forming a high here, a lower high, and this could potentially be another lower high. So you can clearly see that we're on a downtrend. There's no question about it. If we look at the moving averages, where the price is in relation to the moving averages, you can see that at the moment we're underneath the daily 20, the green line, the daily 50 EMA, the yellow line, and the 200-day moving average, which is the black line. So it's below all of the moving averages, and these moving averages will act as a dynamic resistance, and the longer they remain below the moving average, the more negative the price action we are likely to see. So this definitely is looking more bearish than positive. If you look at the momentum indicators, you'll see that MACD has been gradually moving lower. It remains below the zero line, so that's negative. RSI is below the 50 level, so that's negative. So momentum indicators are also negative. If we look at some of the horizontal levels, just to see what are some of the levels we should be paying attention to. So in last week's video, I basically said that S&P 500 traded between this level and this level, and once it broke to this level, you take this distance and double it, which provides a target to this level, which is around 3,800, and that's exactly what we got. So once we reach this, so this trade is effectively over. And what has happened is that since then, it has bounced to the middle of this range. So it has now defined this to be the range. And right now it's in the middle of this range. So and market would now be waiting for the next move. It either moves back down to this level, retests it and go below, or it bounces up, gets price acceptance above this level and then moves up to this level. So those would be the two scenarios. It goes back to 3800, retests it, or it gets back above the midpoint and then moves to the top of this range. And we'll learn about which way the market wants to move, which way S&P 500 moves, perhaps on Wednesday. After the Fed announcement, I would expect market to make a decision whether it wants to go lower or whether it wants to go higher. At the moment, it's in the middle of this range. So middle of this range is around 3930. The top of the range is 4060 and the bottom of the range is 3800. If 3800 is breached, that would be negative. Why? Because 3800, 38 or 3770, the lowest 3770 is an important weekly level. So if I pull up the weekly chart of S&P 500, so you'll see that there is a weekly higher low sits at 3800. So since forming a low here in October, there is a weekly higher low right here. So if this level is breached, then basically this whole structure breaks down on a weekly basis. So this is an important level from a weekly perspective. Now, momentum remains weak on a weekly basis. You can see RSI is below 50. MACD, which has crossed above the zero line, it is beginning to curl. The question is whether it's gonna fall back below the zero line. Well, that is to be seen. At the moment, it hasn't happened, but the weekly picture looks weak at the moment. Momentum indicators are also weak, but as I said, we need, the Federal Reserve decision will probably have a reaction. The market will decide which way it wants to go, whether it wants to move higher or lower. Now for SPY, what are the relevant levels we should be looking out for? So obviously the low right here, last week's low, which is around 381, and the top of the range is around 405. The middle of the range is around 393.50. So at the moment we're just below the midpoint of this range that it has defined. So those would be the levels to watch. Now let's have a look at NASDAQ to see NASDAQ technical picture is just the opposite of S&P 500. So NASDAQ had a good week and NASDAQ managed to take out the previous high right here. So this was the high from early March. So this is 12,465. So it took out that level on Wednesday, and on Friday it retested this and it closed just above this level. So it printed a indecision candle. If you look at the momentum indicators, RSI is above 50 and MACD is crossed and is above the zero line. So the technical picture, the price action, the momentum indicators look positive on a daily basis. If we look at the weekly chart of NASDAQ, so let's look at the weekly right here. So if you look at the weekly chart of NASDAQ, the weekly chart looks positive. You see this bullish candle, it has taken out the previous week's high. You can see RSI is holding the 50 level, MACD is moving higher. It hasn't fully crossed above the zero line. So the momentum indicators are positive. The price action from last week was positive. So the NASDAQ's technical picture looks different from S&P 500. But the question is whether S&P 500 is eventually going to drag NASDAQ down, or whether positive in NASDAQ is going to lift S&P 500. Well, we'll find out about it, most likely next Wednesday after the FOMC announcement. What are the relevant levels for QQQ that we should be paying attention to? So for QQQ, the first level is this breakout level, 305. If it's able to hold 305, that's positive. If it breaks 305, then the level would be around 295. And then if it rallies further, then this early February high, which is around 313.50, 314 would be the next level to watch. If we look at the other level, if we look at Russell 2000, just to see what's happening in Russell 2000. So this is the daily chart of Russell 2000. That is looking negative. You can see big decline. Support after support is broken. Now we're at the December lows. You can see that it's been consolidating between these two levels. So this level is 1800 and this level is around 1700. So having defined the range of these two levels, if it breaks to the downside, the full measured move of this distance will project a target to this level, which is around 1640. If on the other hand it's able to take out this level, which is 1800, so the full measured move will project a target to this level right here, which is around 1885, 1900. But overall, this is looking quite negative to me. If you look at the momentum indicators, they're weak. If you look at the weekly chart of Russell, you can see that this is an important weekly level. If this level breaches, then the June lows would be the next level. The monthly one so far is beginning to look very concerning. This is looking very toppy. And look at RSI, it's getting rejected at the 50 level. Look at MACD. MACD, it looked like it was about to kind of cross and move to the upside. Looks like it is moving lower. This one looks very similar to what we saw in 2008. Right here, in 2008, you can see RSI was trying to get back above the 50 level, got rejected, and we saw big selling, similar to RSI right now. You can see that it was trying to get above 50, rejection, and then if you look at MACD in 2008, you can see that MACD looked like it was going to cross and move higher, then got this secondary decline and moved below the zero line. So MACD right now looks similar to at the zero line. It looks like it is beginning to move lower again, because you can see the histogram is beginning to get bigger, even though we still have a lot of time left in this month. But this picture does not look good at the moment. If this continues to move lower, then I would say this could be a big problem, especially if the monthly candle closes below this level, which is below this red candle. So watch Russell 2000. This is not looking good at all at the moment. But things can turn around. Market could react positively to the Fed announcement and rally. So watch Russell 2000. If we look at Dow, Dow is also looking kind of weak. On a weekly basis, you can see this was a weekly support. This is gone. So having traded inside this range, a full measured move would be to this level around 30,600 level. There's also some support at the midpoint. If you look at the daily chart of Dow, you will see that Dow had traded between this range, and then it has now achieved, so having traded between this range, so it has now pulled back to the bottom of this range. So Dow is also looking weak right here, and look, momentum indicators are also weak. So let's see what the reaction is on Wednesday. But of the four averages, NASDAQ looks to be the strongest, and the other three are basically weak, with Russell 2000 being the weakest. If I look at the European market, DAX, for example, because there's also quite a bit of turmoil in, so this is DAX, the German market. You can see that that's also coming under pressure because of what's happening with Credit Suisse in Europe. You can see it has broken support right here. The full measured move of this distance is up to this point, and it's come close to that level. But the momentum indicators are weak. You can see MACD closing below the zero line, RSI is weak. If this level is breached, which is around 14,600, the next important level would be closer to 14,000. So there's a lot at stake in European market. If I look at some of the sectors in S&P 500 just to see what they are telling us, this is XLK. This is the largest. So let's look at them on a weekly basis so we can see the big picture. So this is XLK. So this one, again, this is the largest group and this is the strongest looking chart. And I would say that XLK has been holding up S&P 500. If XLK was weak, S&P 500 would have been a lot weaker. It would have definitely fallen below 3,800. The fact that it's still above 3,800 is because of this sector, because you can see the technology has been holding up. So you can see that XLK, this is an important level. If it's able to take out this level, then we're definitely looking for a test of this level. On the other hand, the support is now here. If this level is breached, then obviously we would expect a move all the way down to this level. And momentum indicators are positive right now because you can see that RSI is well above the 50 level. It found support at the 50 level. You can see MACD is crossing above the zero line. So this is looking positive. And if there is further move to the upside, it's going to put upward pressure in S&P 500. Next up is healthcare XLV, which is the second largest. I mean, this is not looking, strong at all. It's continuing to move lower. But I want to show you what's happening on a monthly basis. On a monthly basis, you can see that momentum RSI is at an important level, at a 50 level. You can see 50 level acted as support right here, support right here, support right here, support right here. This is a very, very critical level. If RSI breaks below the 50, then I can see a further move to the downside, because you can see that how many times it has held the 50 level. In fact, if you go further back, you can see the 50 level acted as support here as well. The previous time, back in it moved above the 50 level in 2010. Since then, RSI on a monthly basis has never fallen below the 50 level. So this is an important RSI level. So if this goes, then it moves lower, then it's going to put downward pressure in S&P 500. Third, XLF is the next one. This is the third largest. This is not looking good. You can see weekly support being broken. If you look at it on a monthly basis, you can see RSI has fallen below the 50 level. You can see right here. In fact, and you can see MACD is moving lower. In fact, if you look at 2008, you'll notice that RSI fell below 50 level right here, right at this candle, and then bounced and then fell back again. You can see big decline in XLF. Again, you'll see that when monthly RSI fell below 50, you can see a decline right here. So this one is not looking good at the moment. And weakness in XLF is going to put downward pressure in S&P 500. If we look at discretionary XLY, discretionary is also showing some weakness. Momentum is, indicators are at the moment weak. RSI is below 50. So again, if there's weakness in XLY, discretionary, if there is a recession, you would expect people to basically cut back on discretionary stuff. So this would put downward pressure on S&P 500. If you look at XLB, this is building materials. This is broken below the previous weekly low. So this is looking weak. Further weakness is going to put downward pressure on S&P 500. This is XLI, industrial. On the verge of breaking below the previous weekly low. So further weakness, I can see momentum is weakening. Further weakness is likely to put downward pressure on XLI. This is XLU utilities. This is also, you can see, it did have a bounce this week, but overall the momentum is weak. XLP, this is staples. This is also, as you can see, it's been moving lower. It did have an up week this week, but overall it's weak. Energy, it just broken down this week. So further weakness is going to put downward pressure. So when I look at the sectors, with the exception of XLK, all the other sectors look weak to me. So if they continue to weaken, I don't know that XLK is going to be able to hold up the S&P 500. And if XLK goes, then the S&P 500 could drop quite a bit. On the other hand, if XLK continues to rebound and others sort of turn around, then we could see a rebound in S&P 500. But at the moment, we see more weakness than we see more negative signs than positive signs. If we look at some of the other sector, this is semiconductor, so that's looking looking good. It's been consolidating right now, but the momentum indicators are positive. If you look at biotechnology, this is at an important weekly level. If this level goes, then we would expect a move down to these January lows. This is solar. Solar doesn't look good at the moment. You can see break of the weekly previous low. One area which is looking quite strong is Bitcoin. I mean, look at Bitcoin. It had a huge rally, and you can see that it's taking out some weekly key level right here, 25,300. If it's able to close above that, it will have taken out previous, an important resistance zone. In which case, you would have to think that it moves up to this June-July lows around 29 to 31,000 level. So this is looking quite encouraging, despite the fact that there is quite a bit of turmoil in the market. If we look at some of the other markets like dollar, so let's have a look at dollar and gold and all that stuff. So let's have a look at dollar. Where is here is dollar. So US dollar DXY, it's been trading between these two zones. So this is an important level. So it has now defined the zone right here. And so if it breaks below this zone, then a full measured move would project a target to this level. So this level is where it's around 101. On the other hand, if it breaks to the upside, then expect a move to this level. At the moment, the momentum indicators, RSI has fallen below the 50 level, but MACD still is above the zero line. If I look at gold is doing just the opposite. I mean, look at this. This thing is going through the roof. It has broken through multiple resistance level, and it's looking very strong at the moment. So it's taken out this high. So the next level is this level, which is around 2025. This level. And look at the momentum indicators. Look at MACD, strong, moving. RSI, a little bit overbought, but moving higher. If you look at the weekly chart of DXY and important level, if it breaks, then expect a move to the bottom of the channel. You can see it's getting rejection at RSI 50 level. If you look at gold did just the opposite. It found support at the RSI 50 level and then moved up. Very strong move. The previous weekly intraweek high was 1975. It closed just below this level. So we need to see whether or not it's able to take out this level, but momentum remains quite strong. So that's gold. So just to summarize everything, I think next Wednesday is an important day. Bond market is raising alarm bells. Bond market is concerned that bond market is saying that something negative is going to happen in the economy, which is going to cause the Fed to pivot. But what we don't know is if we do have such a scenario, how deep the problem is going to be. If there is a recession, how deep the recession is. But the bond market is basically saying that we are heading towards a recession. Perhaps turmoil in the financial sector, the banking sector, is going to cause Federal Reserve to pivot, and the economy is going to slow down to the point we have a recession. But what we don't know is how deep the recession is going to be. So I'll leave it at this right now. I'll come back to you with another video next week. Thank you very much for watching the video. Please consider subscribing, sharing, all that good stuff. Thank you very much.